Hi traders. Okay, so in this video I'm going to talk to you a bit about trading news. I don't think I've created another video that's specific to do with news and the hurdles that you may face. David, sorry man, I don't know how to pronounce your name, David. He asked a question in regards to news, and so this video is going to focus really on what he's asking. Okay, so the question was, when price reacts to news, do we treat it as a false move? Because you often mention big false moves, but sometimes, not always thanks to market makers, those big moves are the result of news. Also, when price created by news starts forming a pattern, is it a valid pattern or should we avoid it? Okay, very good question. Now, I've always said that the markets usually factor in the news prior to its release. And the reason for that is that if the big players like the market makers are in control of the market at that point in time, what you'd find is that their analysts would have already done their homework and would have already provided them with information in regards to what the news release may actually be. And so they will then utilize the news to move the market in a particular direction, which was already pre-planned, right? Chances are also that the false moves, mate, that you're talking about here, those false moves may be the stop hunt that they're going to do before they move the market in the right direction. And oftentimes, say for instance, you're dealing with, say, EURUSD, right? And you have a news release that happens where it's good news for the euro. How you would analyze that is, first you'd look to see if the currency pair EURUSD is forming any sort of a pattern. If it's, say for instance, it's doing um, multiple hits to the high, and you've got either a double top or a triple top formation, you've got confluence with your fib extensions, you've got support and resistance or resistance zones there. You've looked at the previous structures, and so that's a key area where the market's going to bounce off, something along those lines. And the market is now establishing a multi-session double top pattern. And then you see that there's a news release coming. So what you would be expecting is that chances are that the market will, and you're hoping it's going to be good news because they probably will know about it. What they're going to do is they're going to probably utilize that news to spike the market high. And your awareness there should really be that if I'm seeing a double top setup happening, then I'm expecting market to go back up, spike high, and then come down. So if it's a double top has already been set up and they're stalling the market, chances are they'll probably do a triple top setup, then utilizing the news, and try and do a big stop hunt, trap as many traders as they possibly can before they do an aggressive move south. And you will see that time in, time out, where it's just utilized for a stop hunt. Okay. Other times, what you're going to see is that they're already moving the market in a particular direction. They've stalled the market before then. Say, for instance, it was bad news for the euro, where the market just starts to stall or fall. It just free falls. So, if you can study those two areas and get to know how the market moves around that time, sure, you can trade the news. Just be aware of two factors that will impact on your results. The first one is that when there is news, and especially with different currency pairs, what you're going to find in relation to your broker is that the spreads increase, right? And that's where you see a lot of these issues developing on forums like Forex Peace Army, where a lot of new traders that don't understand this will be on there complaining about the fact that their brokers just scammed them. It's not a scam. It's basically becoming aware of the fact that around those specific times, brokers will increase spreads. You will see them during news. You will see them at, say, the end of New York session. You will start to see spreads opening up, open of London and New York session. You will start to see spreads when the market is at the high or the low of the day. Okay, so once you kind of train your eye to be able to see that, then, and you can see it here, like, you know, when you're looking at your bid and ask, these numbers will start to go crazy, right? So you look at, just watch a particular currency pair. If they're starting to pull apart and you are at a specific area, you know that the spreads are increasing. At the same point in time, when there's news releases, and the best time to actually experience that is with the NFP release. When you're watching it, just watch it the next release that happens. You'll see these numbers start to go crazy, right? And when they do, and more often than not, what you will see is that, say for instance, the market is doing a double top and the market is going to spike up, then one will hold and the other one will go nuts, right? And what's basically happening there is that stop hunt. Let me look for a wick. See this one here. Say for instance, someone's got a pending order here somewhere, right? Or even a stop loss up here somewhere. And what they've often said is, well, market did not go anywhere near here. There's no wick to where my stop loss was. Why did my broker, who's a scam broker now, trigger that off? Well, the reason for that is where market did push up here, but as it reached its actual high of the session or the day, or there's a news release or something happening around there, what they actually did was they opened up the spreads. So the spread would have possibly went crazy and ballistic up here and probably would have gone up, expanded out like 5 pips or so. I've heard people talk about spreads opening up like 30 pips. And it will differ from broker to broker. It will also differ in relation to what sort of broker they are. If it's ECN, you know, their liquidity partners might actually be increasing spreads as well. And what these guys will do is just pass that on to you. So that sort of stuff you've got to be wary of. A lot of the market makers, like FXEM, they're common. This is common behavior for them because they know how many people have how many stop losses, pending orders where. It's shown on their screens, right? So what they'll do is they'll say, okay, we'll take the market up to a certain point. People will establish their highs or lows to a certain point, and we're just going to open up the spreads. And that will then start capturing all these people here. And that's why we say you've got to be very specific about which currency pair you're dealing with, which type of broker you're dealing with, and then adjust your stop losses in relation to that. Some people talk about very, very tight ones. That's okay. But just know that if you are caught up in a news release, those spreads are going to go crazy up. End of New York as well. Spreads open up. A lot of the times people will be screaming foul about them, but this is just common behavior and you got to start becoming aware of that, right? So in regards to that, and the second issue that will happen when you're trading news is slippage, okay? Slippage, very, very common, also comes down, it could be a number of things, manipulation, could be resource or too much impacting on resource, and resource could be your own internet connection, your RAM, because keep in mind when you're dealing with MT4s are very buggy. It takes a crap load of your RAM to run. And if you at any point in time you're running an MT4 and you have Market Watch and everything else activated, what you're going to find is that it's going to take more of your RAM, and so your MT4 platform can freeze. It can slow down more. So what I would do is, if you were to enter into a trade, get rid of all these windows. Okay, get rid of these windows. If you've got other windows open like Chrome, if you know YouTube or whatever else is there, get all of that off, close that off, because then that will allow your system to have more RAM, and so MT4 may not go nuts. And so just be mindful of the fact when there's a news release, there's a crap load of data that's kind of flowing, and at the same time your broker servers are actually handling all of that, and there's hundreds of thousands of connections based on how many clients that they have, and those connections then are going through to the liquidity partners, and there's millions of transactions happening in an instant. So that's going to impact on the resources, and so you'll see a slowing down happen, right? So just be mindful of that. And so quotes and requotes, that's going to happen quite a lot, and what you're going to find is that a lot of the times when you want to get out of a trade, you might not be able to, or when you get into a trade, you get a significant amount of slippage happening. That's not always manipulation. Some brokers actually will use that now, again depending on the type of broker, but that is very, very common. So just be aware of that, and that's the reason why I say be mindful of the risks that you have when you're trading news, right? So we'll have a look at a couple of examples shortly. The other thing that I want you to to become more familiar with is the time frames that you'll utilize when you are trading news. So when you're doing your analysis, best to do it with higher time frame, daily chart, 4-hour chart, 1-hour chart, and then come on to the 15-minute chart to see patterns, right? So if you again see a clear pattern formation happening, and there's possibly, say, a transition into London session or New York session, because those two times are probably the best times to be trading news. There'll be high volume, excuse me, there'll be a lot of liquidity, and at the same time, you're probably going to see pattern formations happen, and you know that the news is going to be utilized for that actual directional move. So you see the double top going into London session, market comes up, good news, then they're probably going to spike it to the high, use that before they come back down again, right? Bad news, you probably still see a spike, right? You'll see a massive wick to the high, and market then falls. If it's going to be bad news and they're already prepared for that, then what you might see is the market go up and do a spike prior to that before it comes down, right? So let's have a look at some examples. Now, Forex Factory. Okay, so we've had 3 red folder releases happen today. The last one for the AUD currency pair happened just over 2 hours ago. So let's have a look at that. So that was negative news, right? Okay, currency pair will go to AUD/USD. Now, when you're doing the news releases, or you're trading the news releases, what I'd like you to do is train more with the majors when it comes to news releases. The minors will move as well, but the majors will react more. What are the majors? All the currency pairs that are linked to the US dollar, right? So here, when you're talking about AUD/USD, in relation, if the Australian dollars or the Australian economy has got some bad news, in relation to the US dollar, that's going to give you more of a significant move, right? So this is the present 15-minute candle. This is, okay, that one. So this was the start of the hour. I'll go back 1, 2, 3, 4. This was 12. And this was 11:30. This was the news release that happened, right? So when you have a look to see where the market was already in somewhat of a downtrend, and they were stalling it, right? So when you see these wicks happening on both sides, that means they were possibly, because this is a major, then they're probably moving a cross pair, and you see these skid marks, right? But they were aware of the fact that they're most likely going to move in this direction. So what you see is 30 minutes beforehand, they started doing their stop hunt high. So they did a wick to the high, aggressive move south, and then they stalled it for 15 minutes before the news release happened. See? And then when the news release came through, aggressive move south. So here, just on this 15-minute candle, you see all the way south is about 22 pip move, right? Prior to that, you've got that stalling happening, but this candle here was a roughly 5.5 pip move. And then you see here a 2-3 pip stop hunt. And this happened half an hour prior to it. So what this tells me is, one, they were aware, and so they just kind of moved the market in that direction anyway. There is not a clear pattern formation, so they didn't really have to build up and then do a stop hunt high before they move the market down. But when you see this, it pretty much automatically gives you some degree of ability or knowledge or know-how in what may happen in half an hour, 45 minutes time, right? So approach it. I've done plenty of trades where, especially with the pound pairs, where I've looked at pattern formations happen, and I've predicted that, hey, the market's going to continue moving in a particular direction. And so I would go into that trade with that directional move. But one of the things I absolutely make sure that I do is I'm going to have a higher stop loss, just in case when they do open up the spreads, if they do another stop hunt, that I don't get caught up in that, right? So you've got to make sure of that. The other thing is your analysis has to be spot on. And in that case, my entry would be 15 minutes, half an hour prior to the actual release, because I don't want to be caught up with the slippage or when the spreads just go absolutely nuts around that time. Okay, and spreads, like, instead of saying having a razor sharp spread of, say, 0.3 or something like that, what you might end up doing is having like an 9 pip spread. So just be careful of that. Coming back to point of what I was saying earlier, where you'll see your like your patterns and stuff happening on higher time frames coming down to the 15-minute chart. If you wanted to trade like live of news, and if you didn't want to jump in earlier like what I was suggesting, and again, I would suggest that you guys, to be more experienced traders, to trade news like you're in the market half an hour or so beforehand. Otherwise, for most new traders, we'll probably just say to you guys that unless it's a clear pattern for you, just stay out of the market. Half an hour, 45 minutes, just make sure you're out of the market before a major release happens. Okay, but if you wanted to trade it, I would do my analysis off the higher time frames, and then I'd jump onto a lower time frame to jump in, and the lower time frame would be most likely a 1-minute chart, right? Why a 1-minute chart? Because what I would do is I wouldn't rely on, say, investing.com or Forex Factory. I'd want to make sure, and there are a number of services out there that will give you a result straight away. With Forex Factory and investing.com, they delay their results. I'm not sure. I've never really checked to see if they've got a premium service in that regard where news releases happen. I'm sure they do. But most of them, the ones that give you the release on that second, there are some services out there, and you would utilize them before you took an entry. Because if it's a big release and the market does move quite significantly, like is the case here, right? So it took 2 minutes or 3 minutes for that market to move 21, 22 pips. And you got some degree of slippage, you will still probably be down here somewhere before the market continues to move, right? Chances are that you will still be in the money. And how long would you be in the market for? Not longer than a couple of minutes, right? And again, the reason for that is that if, say for instance, you've screwed up your analysis and the market is going to do some degree of like a retracement, what you'll find is this comes down, market pulls back up again. And if you are in a very short time period, you'll get stuck, right? So do that. And your entry, time-wise, you want to be as close to the beginning of that 1-minute candle as you possibly can. If it's taking too long, cancel that order, get the hell out of there, right? So that's how you would do it. Forex-wise, I never recommend that anyone jump into a Forex trade like off a 1-minute chart doing something along these lines. Unless like you're very accustomed to a specific currency pair, it's going to do you no good. Because you'll get plenty of solid, predictable opportunities throughout the week anyway, where you hit your 20 to 50 pips. Okay, so don't put yourself up to that much risk. Okay, let's see if we can see another example. USD FOMC meeting minutes. We'll leave that one alone. CAD. Okay. This is always a significant one where the market does move quite significantly. Bad news with the CAD pair, 12:30 a.m. Sydney time. All right, let's go see. Now again, we wanted to do so on a major. So USD CAD would be the one. Bad news for the CAD. So what we are saying is that chances are US dollar will go up, right? So we're on the 15-minute time frame. Again, best way to do it. Let's do it. Jump onto an hourly time frame. For me, 12:30 would be this candle here, this 1 hour candle. Right, so I'm just gonna drop a line on that one. Actually, I don't have to drop a line on that one because that's the start, first hour of New York. Okay, so here we go. Here is where the market opened, right? Here is, on this candle, is when the market did its news release, right? Look at this candle here. Massive green candle, moves up about 30 pips. USD CAD, right? Now, look at the behavior of the market for USD CAD throughout the Asian session and going into London session. Remember, part of our strategy was that when you see this clear pattern, it's a W formation, market goes up. If you traded this, fantastic. The behavior we're expecting going into New York is a pullback, a pullback at the start of New York, hopefully coming to hit our 50. But if it doesn't hit our 50, we'd like to see a wick to the low before the market goes up, right? Now, the market already established its trend direction. And all that this was doing was completing off that directional move going into New York. So bad news was released for the CAD, and that was expected. They knew. So what the market did was it stalled, right? It stalled, and you see some degree of consolidation. It stalled here again, and then you get a tiny green candle before the market just shoots up. And that is what we actually want to see. Okay, foreground chart. Okay, that's better. So see this green candle? And then the market pushes up. So if you kind of are aware of what the directional move is and you're seeing some sort of pattern, like in this case, we're seeing this pattern, you can, to some degree, predict whether this is going to be good news or not. Now, say, for instance, this was bad news for, it was good news for Canada. These results here were good. This was in the positive. It was at forecast or above forecast, right? What you would have seen would have been that there would have been a spike to the low at the 50 and then the market would have gone up anyway. Why? Because that was the pattern. That was the pattern formation. And that's how you would trade that, right? If you wanted to trade it with, say, short, 1 or 2 minutes, again, you'd see the pattern on the 15, then you go back and you'd trade that off the 1 minute chart. And you'd look for what the market would have done here. So see, there's your 1 minute chart. Now, market in this case, see how it comes back, hits the 50 and bounces up. Your release happens, you utilize whatever service you're utilizing, and it's a very quick move. Boom, you'd have some degree of slippage, but in that minute, like, you would have been very nicely in the money. That is a strategy. It's not something that I promote, but you could certainly trade that. Okay, and trade that on binary, not Forex, sorry. You can do that on Forex. I don't think it's really worth it, but trade that on binary. You will get the slippage and your entries will stuff up maybe a little bit, but you will still make some degree of wins out of that, right? And that's practically what they do with news. They will use it to either create patterns, complete patterns, or after the pattern's been formed, they'll use it to move the market in the direction that they've already planned it to move in. Okay, and that's it. I hope that answers your question, and that's how you apply the different news releases. In relation to the different colored folders, so yellow, it really just means the impact on the market is slim. The orange ones, they will utilize the orange ones to possibly begin the formation of patterns or do some degree of stop hunts or something along those lines. Right, so pay attention to them, and those are the times when, like, say for instance, you see a pattern formation happening in the Asian session, and you've already seen that when the market is going to go into or transfer into London session, then there's a whole heap of news releases happening, right? So in this case, for us, we don't really have too much European news releases happening tonight, right? So in that case, what we're going to do is do our analysis, but not expect any sort of like a major stop hunt when it comes time for the market to establish a trend bias. And so those are the instances where what you might see is where the market just kind of very subtly just continues to fall, whereas there's no specific stop hunts happening here because they didn't actually have anything to blame the stop hunt on. Okay, all right, so I think hopefully that makes it more clear. There really isn't anything more in relation to news that you can utilize here. Okay, all the best.